While all that is on the amusing side here, one thing that Allison said that I want you to zero in on is the idea that you need to talk to an expert when it comes to your finances. And that's why we're so glad to have Steve Sexton back this morning from the Sexton Advisory Group to get us up to date. We haven't seen you for a while, and the markets continue to be unsettled. There's uncertainty in Europe. Folks want to know what to do with their money, and the biggest thing that you like to focus on is don't let any dollars slip through the cracks.
That's correct. That's correct. Now, in the last month, we've seen a lot of wonderful things happening. For example, the Greece situation where they settled the bond default and all that. And
Is that really settled now, do we think?
Not completely,
okay.
Because we have the European community settled on austerity measures, but their own parliament's got to say yes, and there's 3 that are not even making those yet. So that's been settled down, but it'll pop up later. We're also seeing things like our unemployment look like it's getting a little bit better, but we still have issues with the type of jobs that people are getting employed by. They're not really paying for a lot of things.
Well, and these numbers, too, I wonder how much they get manipulated, because we hear that so many people have dropped out of the job market that aren't even searching for jobs anymore, so they don't get counted. If you throw those back in, the number is a much higher number. So it's tough for the layman to tell what's going on here.
Well, they don't count people who no longer can get unemployment. They don't count people who have stopped looking for a job for more than 30 days. So those things are kind of dysfunctional from that standpoint.
So this is where somebody like you comes in that really studies these things and reads between the lines and you know, reads more than just the top sheet of the press release.
Well, the big thing is Ben Bernanke. What he tells us is, you know, we're going to hold interest rates low till 2014. That means we have some structural issues in the United States. So there's a lot of little things going on, and when interest rates are lower, companies like it, investors like it, because they see, hey, now let's invest in the market, and we're seeing and we're benefiting from that right now.
Talk to me a little bit about the equity markets, and just because, again, it's been a while since we've talked.
Okay, so let's talk about that. Right now is the time where people need to be taking a look at what they have. There's a lot of warm and fuzzy out there, and I'll give you an example. I talked to a client yesterday. He was frustrated because his large portfolio wasn't moving forward, but he wasn't paying attention to the fact that he had 80% of his assets in bond funds and 20% in equities, and people are leaving the bond funds now and moving into the equities, and he's going, hey, I'm losing money and I don't know why. And the reality is he just didn't know the questions to ask his advisor, and if he did, or if he had somebody that would ask those questions, he'd realize, hey, this is the reason why I could be losing money. If that discussion happened in November, he would have been in a lot better position right now. In addition to that, we have taxes coming up. Right now, it's a big thing. I'll give you an example. 2007, many people had a portfolio. It could have been $500,000. And every single year, when you have an advisor that manages that money or a mutual fund, they buy and sell. When they sell and there's a profit, there's a capital gain. Like in 2011, very volatile. Many advisors or many managers were selling off assets and moving into market sectors that were working. But as a result, they've got this big capital gain. So between January 15th and February 15th, you, I, and everybody else got one of those. On a portfolio that size, it could have been $15,000, $20,000 in capital gains, $3,000 in taxes. Now, besides that, what is the portfolio worth now? $440,000, $450,000. So you lost $50,000 in the portfolio, and you have the privilege to write the IRS a check for $3,000.
So, folks, we don't want you to get into that kind of situation. That's why Steve has got another series of amazing free workshops coming up here. I know you do this just because you think it's the right thing to do, and it's public service for you. But it's pretty amazing. This next one coming up here towards the end of the month?
Well, there's coming up on the 20th, one's today. There's 5 spots left, so if somebody like to go, they want to call now.
Still get in today, okay.
And, well, we extended it because it went from 40 to 50. And then next Tuesday on the 27th, it starts at 4 o'clock, and there's the 10 spots left, so you want to call now. Again, we're going to talk to people about how to take control, how to find that money falling through the cracks by asking questions that you don't know to ask, didn't think to ask your advisor, or didn't know to ask multiple questions to drill down to find out where that money's falling through the cracks.
Steve Sexton, the Sexton Advisory Group. You saw the information on your screen, and we'll let you know. You can always go to san-diego6.com, click on San Diego Living if you need more information on that. But take advantage, again, of free seminar with our expert, Steve Sexton. Great to see you, Steve.
Good to see you too, Mark.
Take care.
Bye-bye.